This one choice ruins people's lives, and they don't even realize it until the damage is done. It usually happens when someone wins the house but inherits a payment that eats their budget and kills their options. Keeping the house isn't an emotional decision, it's a monthly cash flow decision that either supports your stability or quietly squeezes you for years. I'm Melina, Rissone, and I help San Diego homeowners navigate major transitions, including divorce-related housing decisions. If you're deciding whether to keep the house, sell, rent, or buy something else, it's normal to want to stay. But the deciding factor is usually affordability, because that's what determines whether keeping the home is financially safe or financially risky. After divorce, the right housing choice is the one that works in real life, especially when your income shifts, unexpected expenses pop up, and you're handling everything on your own. San Diego housing is expensive across the board, so it's smart to start with real numbers and a realistic monthly budget. As a general snapshot, median home prices in the city of San Diego have been hovering around the $900,000. Mortgage payments also swing widely, with interest rates and recent 30-year fixed rates have been around 6% range, which can meaningfully change what affordable looks like. That's why this decision can feel so difficult. Selling isn't automatically cheaper, and staying isn't automatically safer. The best choice is the one that still works best for your budget. A lot of people start with, do I want to keep the house? But a better question is, can I keep it without putting my finances at risk? If you're considering keeping the home, it can work when the post-divorce numbers truly support it. It becomes a problem when it only works on your best month. The house is more than just the mortgage. It's taxes, insurance, maintenance, and sometimes HOA dues or assessments. After divorce, you're covering all of it. Keeping the house can work if you can refinance into your name alone, assume the loan with a lender, or have a clear and realistic timeline to qualify. You should also have reserves for repairs and unexpected expenses, and the buyout terms should not drain your cash cushion. On the other hand, selling and resetting, sometimes with a rental period, tends to be safer in certain situations. If you're relying on overtime, bonuses, or inconsistent income to cover the gap, that's a very fragile plan. If you can't refinance soon, but your name is still on the mortgage, that's a liability risk that can follow you for years, and I hear these stories all the time. And sometimes selling is the most stable choice because you need equity to pay off debt, fund your next move, or rebuild your reserves. Two legal and lending issues often reshape the divorce housing decisions in California. First, California is a common community property state, which means the court may treat what you bought or earned during the marriage differently than what one spouse owned before the marriage or received as a gift or inheritance. For more information on this, the California court's self-help site is a solid place to start, and consult with your attorney. Second, a quitclaim deed can change who owns the home, but it usually does not change who owes the mortgage. In other words, the ownership and the loan are separate. So the lender can still pursue anyone listed on the mortgage unless the loan is refinanced, assumed with the lender approval, or the lender signs a formal release. That's with your attorney, lender, and real estate advisor should agree on, and the plan and the timing have that agreed upon upfront. If you're considering keeping the home, use the simple process before you commit. Step 1 is calculating your true monthly housing costs. Include principal and interest, property taxes, homeowners insurance, and HOA dues. Include utilities and a maintenance reserve. If you have support obligations, include those in your cash flow picture too. You want a realistic number. Step 2 is stress testing the budget. Ask, if I have a bad month, does this still work for me? Bad months happen. Repairs, insurance increases, slower work months, medical bills, car repairs. Build a buffer and see if the housing cost still fits without a strain. Step 3 is clarifying equity and buyout math. If you're buying out your ex, you need clear numbers and a clear timeline. A sensible plan includes a professional valuation strategy, a written refinance or sale timeline, and a clear outline of who pays what for repairs and carrying costs during the transition. You also want a backup plan if the refinance doesn't happen on schedule. Deadlines, triggers, and next steps should be clear so you don't stay financially tied longer than necessary. Quick pause before we continue. If this is helpful, please subscribe. I share videos focused on real-life housing decisions in San Diego designed to help you stay informed without pressure. Now back to the video. Renting after divorce can be a smart short-term move if it gives you time and financial security. Renting is often a better fit when you need predictable costs, when you're rebuilding credit or income history, when you don't want to drain cash on a down payment and repairs, or when you're not sure whether you want to land long-term. Another tip, keep your search practical by filtering for what affects your daily life, like commute times, parking, laundry, pet rules, storage, and deposit. If you can choose a lease term that gives you flexibility while your finances settle, you might want to consider that. Buying after divorce can make sense when your income is stable, your down payment doesn't wipe out your reserves, and you plan to stay put for several years. The key is buying within your real budget. Loan approval doesn't mean the payment will be financially comfortable or that it will still work when the unexpected happens. In San Diego, affordable often means a smaller home, a condo or townhouse instead of a detached home. A location shift that still works for your routines, and renting first and buying later is an option. Some divorces involve creative structures like deferred sales or equity offsets, but those should be reviewed carefully with your attorney and lender to avoid accidental liabilities. So here's the 5-step strategy. First, build a realistic post-divorce budget that includes support, debts, and savings. Second, get a refinance reality check from a lender so you know what you qualify for and what timeline is practical. Third, get a real evaluation strategy for your home, not just an online estimate. And fourth, compare these scenarios side by side, staying with the refinance and buyout plan, and also looking at buying a smaller property or maybe renting. Fifth, make sure this all works even if you have a bad financial month. The takeaway from this video is simple. You don't need to win the house. You need a housing plan that protects your future. It's the post-divorce numbers work, including mortgage, taxes, insurance, and maintenance, and a realistic refinance plan. Staying can be a stable option. If they don't, renting or buying a smaller home may protect your cash flow while you reset. When you compare the 3 options, staying, renting, or buying smaller, each has a trade-off. Staying can preserve continuity, but refinancing hurdles and ongoing ownership costs are the main risks. Renting can provide breathing room and predictable maintenance responsibilities, but rent is still expensive in San Diego. Buying smaller can create a clean restart and long-term stability, but the risk is stretching at today's rates or committing to HOA rules and dues that don't fit your lifestyle. If you want help without pressure, I can help you get clear on these 3 things: what the home is actually worth, what your options are, and what timeline will reduce your risk. A good first step is a private consultation where you bring your mortgage statement, HOA info, if any, and a rough post-divorce budget. You should leave with clear scenarios you can take to your attorney and your lender. If you found this video helpful, please subscribe. And if you want a clear plan for your home here in San Diego, reach out for an evaluation so you can compare your options based on your numbers and your timeline. I'm Melina Rissone with Coldwell Banker West. See you next time.